Good afternoon. This is Craig Modelmog with this week's episode of Wall Street X's and O's. Today is Friday, September 4th. Welcome to September, right? School year's getting kicked off. Got Labor Day this weekend. Looking forward to a 3-day weekend. Tanya's son CJ flew in last night and taking a little break, so it's going to be good to hang out with him this weekend. But I hope everyone has a little R&R time. But to kick things off today, first of all, the ever so popular disclosure or disclaimer, you can use either one of them. It means the same thing. But anyway, the opinions on this show are in fact mine. They are not a solicitation or a encouragement to buy or sell anything. Investments can and will lose money, and investments are not FDIC unless you are buying a CD. Onward here. Newsflash, 112 days to Christmas. So for you planners out there, you know what? Start thinking about shopping. There's going to be lots of good deals this year. Lots of good deals. So anyway, 112. You got to love it. Today's show, we're going to hit unemployment again. There's a new calculation method. I love the timing of these new methodologies. You know, in the midst of a poop show, let's change how we calculate things. You got to love that. We're going to talk about the history of manias today, going back to the 1960s, and the dollar continues to slowly decline or devalue. And we're really starting to see some changes out there regarding a cost of goods. So anyway, kicking it off here. Unemployment. Yes, here's the deal. They have changed from a multiplicative factoring component to an additive factoring component. What's the difference? Well, here is the difference. Additive, okay? And this is what they are using now. It is a result of more adding numbers together. It gives you more of a linear trend, okay? Which when you're looking at tracking unemployment and the numbers, a trend line is something that is helpful. Multiplicative, though, adds a compounding effect or a seasonal adjustment, which to me, you think, well, what's the difference? Well, when there's not a whole lot going on, i.e. pre-COVID-19, unlike the financial crisis, unlike the other recessionary periods, really not a whole lot of difference. When you factor in a lot of moving numbers or a lot of things that are really amplifying, there can be a bigger difference. And what you will see is the additive methodology kind of, I'm going to say it tones things down. That's my mathematical impression. Obviously, as time goes on, we will see, but that's kind of what I'm thinking. So basically, last week, we reported a little over 1.1 million, or right in that ballpark, of new unemployed individuals. This week, the number came in, and I had this 821,000. So, you know, honestly, really not a lot of difference. Okay, what we're seeing is the labor market is improving, albeit slightly, but here's the problem. The pace is slowing. You hear me talk a lot about the rate of change, okay? As rates of change accelerate one direction or the other, that's a good thing. As rate of change start to decelerate, which is what I think we're going to have here as we go through August, I'm anxious to see as we get into September, October, into this fall, what that's actually going to look like, okay? Looking at the actual numbers again, reported 881,000 new unemployment filers. As far as total weekly jobless claims, 13.2 million. Here's a troubling one, PUA claims. These are the pandemic unemployment assistance. These are independent contractors. These are 1099 people, all right? Going back to August 7th, where PUA bottomed at 490,000 for the week, we've seen that gradually go up to this week's number of 759. You don't like to see that number. Total unemployed benefit recipients, and again, this is a 2-week lagger. Remember how I talked about some of these are a week behind or 2 weeks? This is the 2-weeker. It went up, and actually by quite a bit. Last week we showed just a hair over 27 million. This week we're showing 29.225. That's 2 million. That's a big jump, okay? We also saw the number of jobs that are history, meaning they are gone forever, increased to over 3 million. So I think there's a lot of people who are unemployed that now are looking, going, my job's probably not coming back. This is going to be really interesting to watch again as we move into the fall. All right. Looks like we've got the politicians at a stalemate for another round of government stimulus. We may not get one. All right. There's a possibility. The probability rises the closer we get to election day of a deal not happening. This actually plays to Trump's hand. Love him or hate him. He likes to create chaos. He likes to play off of chaos. I think he hopes they don't get a deal. You know why? It's going to make him be able to stand on a hill, beat his chest, and say, "Hey, I'm cutting a deal for the American people." Plays into his hand. I'm anxious to see how this continues to move forwards. Okay, lots of exciting stuff. Obviously, as we get closer to November, we got some debates coming up here. All I can say is pay-per-view. I would stink and pay for that. I'm not a pay-per-view guy. I would pay to watch Biden and Trump debate. I could see them wanting to fight each other on stage. Let's get back to some of these other countries where you see parliament and they start scrapping in the seats. We could see that. I would not put that past anything, because it's just when you think you've seen it all, you haven't. So it's going to get good. That's all I can say. Let's go into the history of manias. Oh, I know you're thinking, oh, Krager, where are you going with this one? This goes back to 1960. Okay, and these are 1, 2, 3, 4, 5, 6. I knew that. I had to count them because I lost confidence there temporarily. Anyway, these are manias where we've had events really significantly rise, go off the Richter scale, only to correct in a really hard fashion. Back in the 60s, we saw Walt Disney explode, only to fall off in the early to mid 70s. Then in 1970, we saw gold take off. Gold set all new time highs. Oh my gosh, gold's going off the Richter scale, only not to. Following that was the Japanese banks. Remember, we talked about the Nikkei going up and seeing levels we've not since seen. In fact, it's about half of what it was back in the late 80s. Japanese banks explosion, crash. You get into the NASDAQ 100, which gets into the .com, .bomb, lots of cool acronyms. Going around the end of the 1990s, 2001 and 2, which was a big recessionary period. That started off the decade of no growth, which was essentially from 2000 through 2009, zero growth in the S&P 500. So the NASDAQ explodes the top side, crashes. Another one, which this one went under the radar, I did not know this. Iron ore, from a commodity standpoint, iron went crazy. Remember? We had all the iron wars, U.S., China, made steel prices, iron prices do what? Go through the roof. Again, once exploded, downside. The one we're in the midst of, this is going to get fun, and this is the Fangum. Facebook, Apples are. Hold on here. Apples are. When it's Friday afternoon, and it's a 3-day weekend, you start making up freaking words, Apples are, micropest. I'm done before I really embarrass myself. Anyway, Facebook, Apple, Amazon, and there's my phone. I cannot answer that, Rick, whoever that is. I don't know who that is. You know what? They can hold. I'm busy right now. Facebook, Apple, Amazon, Netflix, Google, Microsoft. This is the most recent explosion. Remember, I've talked about how those 6 companies represent in excess of 40% of the NASDAQ from a market cap standpoint, and in excess of 20 to 21% of the S&P. We've seen that this week. This week, the market has gotten stinking hammered. If you look at the NASDAQ since Tuesday, whoo, man, cinch up the seat belt and grip and rip, because man living, it was an interesting week. What's going to happen next week, I don't know. We saw a little bit of craziness today, but calmness may be returning because volatility is decreasing. Okay, we talk about volatility, and I talk about the volatility regime, which is a real fancy word to use on Friday afternoons. But when I look at volatility, I look across asset class and across asset category. So if you see volatility rising across multiple paradigms, all of a sudden you start to you see things begin to change. We saw this start to change last week. We saw the VIX. We saw volatility in the Nasdaq. See, I'm rocking a little bit here. I get fired up and I start spitting. There's like spots on my screen right now. So we saw volatility in the Nasdaq. We saw volatility in small caps. We saw volatility in Apple go through the roof simultaneously, which the trend reversed from bullish for stocks to bearish. Volatility was off today, so I'm anxious to see if we get any type of follow through next week, in which if we do, it would not shock me to see the markets kind of reset and continue to march forward here, although maybe a little bit more cautiously. Time will tell. Okay, on to the dollar. I've been talking about this and how it really is concerning, not concerning, because we're really prepared. We're kind of short the dollar. We bought tips. We're in commodities and gold. We're actually in a really good spot, but here's what's happening. Here's what concerns me. We have a lot of people right now that are financially struggling. All right. Here's what's happening. And these are just some prices of goods and services out there. And this is how I'm going to close out the day here. This is from Reuters. This is legit. This is not fake news. Okay. Although fake news is very prevalent. I saw where Facebook is saying, you know, a couple weeks prior to the election, we're not going to allow any stories on good luck, Mark Zuckerfreak. See, another word I just created, Mark Zuckerfreak. Hopefully I'm sure Mark's not watching this, so who cares? Mark will be just fine. Mark's got plenty of money and it doesn't matter. But leading up to what's going on is we have a lot of people unemployed. We have a lot of people underemployed. Most likely there are more layoffs to come, okay? We have wages rising for corporations. We have revenues falling. The problem is this: when companies' labor costs start to rise, one of two things has to happen. One, you either need an acceleration in revenue so you can cover your costs, or if that doesn't happen, you start firing people. These aren't furloughed people. These are bye. We can't bring you back. See you later. Bye. Here's what is concerning, because you have the dollar continuing to drop in value. Government has printed a boatload of money. We are now one of a very few unbelievable countries where our debt exceeds our GDP on an annual basis. And I'm going to talk about that next week. I'm too angry to talk about that right now. But anyway, let's look at some costs. Eggs, okay? The price of eggs have risen 16.5%. Ketchup, French fries, it's not French fries. I have some French fries with my ketchup. Load them up, dig it in there. Oh, dang, it's good. I love that. Ketchup rose 4.9%. Instant coffee, hate instant coffee. It's garbage. Although when I was in college, when I used to study, we would get instant coffee and stick it to our lips like chew, thinking we would get a buzz because I couldn't do chewing tobacco. It made me throw up. And it didn't work, but instant coffee is garbage. Anyway, I digress. You look at cheese, increased by 7.3%. ending August 22nd. Lunch meat is up 8.1. Meat is up 13.8. Nike Airs, I hate Nike, I'm an Adidas guy. Nikes are up 10.5%. I don't know anything about these next two products, but some of you ladies out there, Lululemon, I think my daughter loves them. Lulu, we're going to go with the short version. L-U-L-U is the symbol. We're going to say Lulu. Yoga pants, my daughter has about 100 pair of them, up 7.2. Lizanne, you can't buy any now. They're more expensive. Under Armour sports bras, see, told you haven't ever bought one, up 9.4%. Craft beer up 2. Traditional beer up 2.7. Major appliances up 3. Louis Vuitton, don't buy that, but up 5%. Infant formula, people buy that stuff, up 4.4. Toyota RAV4, don't have one, up 3%. Laundry detergent up 9.2. Bottled water up 5.3. Onions up 2%. Edam cheese, I have no clue what that is, so I'm going to skip that one. And that rounds it out. Here's what's happening. Inflation. Okay, we've been talking stagflation. Prices are going up. It's costing us more money to go to the grocery store. Okay, here's what's going to happen. What I tell you to continue to watch the dollar and its value. If it continues to go down in value, what's going to happen? Prices are going up. Let's continue to watch gold. Let's continue to watch commodities. Tips. Guess what? That's the place to be. Treasuries sold up. I actually bought some treasuries this week. Interesting. It's going to be fun to see what happens. I'm excited. All right. We had good stuff this week. Going into this next long holiday. Again, first of all, 112 days to Christmas. That's for one of my buddies out there. And his Christmas this year is going to be great. It's his last Christmas employed. He's going to gallop off into the sunset. And I'm really proud of him. He's done a great job. For all of you that have gotten to that stage of life, congratulations. I'm a hell of a long way from it because I started a company and have put one through college, and I'm working on a second. So I'm working friggin' forever probably. So anyway, but it's all good. Have a fantastic long weekend. Hopefully you get some downtime, spend some time with some family and some friends. Breathe. All right. This is an interesting time. COVID is what it is. All right. We're getting more comfortable with it. I hope things are starting to slowly come back to normal. I'm very concerned, though, about the deceleration we're seeing in some of the numbers out there. And we're going to continue to watch it. We are going to continue to keep our eye, on the ball. We're not going to be like the Rockies and give up 5 spots in the first inning and the 4th inning, and then you go dry behind the plate and you give up. It was a damn football score the other night, 23-5. That's football. That's not baseball, Rockies. Embarrassing. And now we're playing the Dodgers tonight. I'm nervous because we suck against the Dodgers. Not to digress and start talking sports on here. But the good thing is we have football teeing up next week. I'm excited. It's starting to feel like fall in the air. And Tuesday, if you live in Colorado and you're watching this, guess what? We may have snow flurries on Tuesday. I'm fired up. Anyway, for Friday, September 4th, this is Craig Modelmog for this week's Wall Street X's and O's. Thank you for joining me. Pass this on to your friends if they want to watch somebody be crazy, but give some good factual data to help people become what? Better investors. Love you guys. Take care, and I am